Tabcorp has made its biggest strategic move since Gillon McLachlan became chief executive 2 years ago, agreeing to acquire wagering technology company BetMakers in a deal worth $267 million. At first glance, this looks like a straightforward acquisition, but the real story isn't about buying a company. It's about buying technology, talent, and arguably a new identity for Tabcorp. The deal could help reshape the wagering giant from a traditional bookmaker into a global supplier of wagering infrastructure. So what is the deal? Tabcorp has entered into a binding scheme implementation deed to acquire BetMakers for 24 cents a share, valuing the company at roughly $283 million in equity value and about $267 million in enterprise value basis. The deal still requires a shareholder, court and regulatory approvals and is targeted for implementation in the third quarter of financial year 27. For McLachlan, it's the first major acquisition of his tenure and a clear signal that Tabcorp's transformational agenda is accelerating. So, why does Tabcorp want BetMakers? The first reason is technology. Tabcorp believes BetMakers has already built the type of modern wagering platform it wants for itself. During the investor call, management repeatedly described the deal as the fastest, cheapest and lowest risk path to modernising technology. Technology chief Rob Fraser added that Tabcorp still operates a mix of legacy systems, on-premises technology infrastructure and cloud environments, while BetMakers has already completed much of the transformational work Tabcorp is trying to achieve. The acquisition also gives Tabcorp greater exposure to AI capabilities, with McLachlan specifically highlighting BetMakers' early adoption of artificial intelligence and digital transformation expertise. The global play. Technology is only part of the story here. BetMakers generates most of its revenue internationally and brings significant global tote, data and distribution capabilities. According to the investor presentation, around 60% of full financial year 25 revenue came from global tote and 40% from global betting services, while 73% of revenue was generated outside of Australia. McLachlan sees the combination as creating a global B2B wagering and media business, bringing together vision, rights, data, technology, tote operations and distribution. What we're talking about is having a full suite of vision, data, technology and wagering services and having them end-to-end and distributing to every significant territory in the world, McLachlan said. The company's existing international business, including PGI and Sky Racing World, already generates about $350 million in annual revenue, giving Tabcorp a substantial base on which to build. Now the factory v shop question. Perhaps the most interesting way to view the deal is through that lens of it being a factory versus shop discussion. For years, Tabcorp has primarily been viewed as a wagering operator, the shop, a company competing for punters against Sportsbet, Entain and other bookmakers. But this acquisition suggests McLachlan may be thinking much bigger. BetMakers supplies technology, data platforms, tote services and infrastructure to wagering operators around the world. Tabcorp already supplies racing vision and content to competitors through Sky Racing. Together, the businesses could increasingly resemble the factory behind the wagering industry, rather than simply another shop front competing for customers. If that strategy succeeds, Tabcorp becomes less reliant on where customers place their bets and more reliant on providing the technology and platforms that powers wagering businesses globally. The big question, what about current BetMakers customers? There are currently around about 50 bookmakers that are on BetMakers, effectively a white label platform. Obviously, those customers are bookmakers. They compete directly with Tab. Those spoken to by the Straight already have indicated they have some misgivings around Tab having access to their customers and what that may look like. Management was keen to stress that existing commercial relationships will remain unchanged, pointing to Tabcorp's long history of maintaining wholesale relationships with competitors through Sky Racing. But the industry will be watching closely. Will bookmaker clients be as comfortable buying technology, data and wagering infrastructure from a supplier owned by one of their largest competitors? That's probably the biggest strategic question hanging over the transaction and one that won't be answered immediately. The numbers. Financially, Tabcorp is targeting at $30 million a year in run rate cost synergies by the end of the second year of the ownership. The company expects the deal to be earnings accretive from year 2 and deliver double-digit earnings per share accretion from year 3. The company has also disclosed about $20 million in expected one-off integration costs as systems and operations are combined. So, while this has been presented as a technology acquisition, it may ultimately be remembered as something much larger. Yes, Tabcorp gets a modern tech stack. Yes, it gains AI capability in digital talent. And yes, it strengthens its international footprint. But what McLachlan may really be buying is the ability to reposition Tabcorp from a traditional wagering operator into a global wagering infrastructure company. The question is now whether BetMakers customers continue buying from the factory once it's owned by one of the shops.